Assalamu alaikum, dear students. Welcome back to the class of Islamic Banking and Finance. Dear students, today is our 10th lecture of Islamic Banking and Finance. Today we will discuss the sukuk. Dear students, recall from the lecture 8. In lecture 8, we started the concept of Islamic capital market. In Islamic capital market, in lecture 8, we studied some part of the Islamic capital market in lecture 8, such as conventional capital market. We also studied Islamic capital market, investment in shares, Islamic investment funds. We studied all these topics in the lecture 8. In lecture 9, with the proceeding of lecture 8, we studied the remaining part of the Islamic capital market, that was derivatives. We understood the derivatives. Today we will study the last part of Islamic capital market, that is sukuk, or Islamic equivalent of bonds. Sukuk, or the Islamic equivalent of bonds. If someone asks you that what is sukuk, simply you answer them that sukuks are the Islamic equivalent of bonds. They are same like bonds, but on the base of Islamic principles, on the base of Sharia compliance. So let me start with the sukuk. That what are the sukuks? Sukuk refer to Islamic investment certificates. So if you remember, bonds are also investment certificates, but sukuks are Islamic investment certificates. Both are the same, but they are on the basis of Sharia principles, Sharia compliance, and bonds are conventional certificates. Those are conventional certificates. Those are not, bonds are not on the Sharia compliance, but these certificates, such as sukuk certificates, are the Islamic Sharia principle certificates. So same like bonds, they also allows investors to have right of ownership. But difference is that in the case of bonds, bonds are debt instruments, debt certificates, but sukuks are not debt certificates, they are ownership of the assets. Investors to have right of ownership of the assets. In the case of bonds, there is no ownership in the assets, they are only certificates of debts. But in the case of sukuk, investors are owners of the assets, including the cash flow and risk associated with such ownership. In the case of bonds, there is no risk, there is only fixed income on the base of interest. But in the sukuk, there is also risk and cash flows. Cash flows means income. There is return and risk. In the case of sukuk, there is return plus risk. But in the case of bonds, there is only return, no risk. Sukuk offers diversification for investors for their portfolio. Bonds are also diversified. When investor purchases bonds, the investor expect to diversify its risk of the portfolio. So in the case of sukuks are also purchased or sold for the purpose of diversification of the risk for portfolio of the investment. Sukuks are asset backed. Bonds are not asset backed. Sukuks are asset backed, they are tradable, and they are Sharia compatible trust certificates. Sukuk is the plural form and sak is the singular form, means legal instrument, deed and check. It is the Arabic name for the financial certificate. It is also Islamic debt instruments and can be referred to as securities. What? Sak. Sak is also Islamic debt instrument and can be referred to as securities. Why it is called securities? Because it is asset backed. So therefore it is called securities. Securities mean they are protected, they are collateralized, their notes, their papers are their certificates with features of liquidity and tradable. Liquidity mean they are easily tradable, they are easily sold back in the money market or secondary market. It is SAC is believed to be the source root of the European check and is referred to any certificate representing a contract or conveyance of financial rights, obligations or money transactions that is Sharia compliant. The origin of sukuk can be traced to the Middle Ages, whereby sukuks were largely used by Muslims as papers representing financial obligations originating from trade and other commercial activities. So these are sukuk. Reasons for issuing sukuk: why companies, why organizations, why institutions issue sukuk. Growing demand for investors to place their funds in accordance with Sharia compliant principles. So nowadays there is a growing demand for the investors, for the Muslim investors who place their funds in accordance with the Sharia compliance. The investors who want to place their funds in accordance with the Sharia compliance. This enables diversification of portfolio. Before we talked about it, before we discussed this, they want to, the Islamic investors, the investors who are based on Islamic principles, diversify their risk of their portfolio, their competitive yields and better results. Competitive yields means they competitively provide a higher yield, higher return, and they have better result other than bonds. Governments or corporates are able to raise funds for their working capital. In the capital market, we studied this. Recall from that lecture that we studied that the purpose of providing or issuing of sukuk or bonds is to raise funds for their organization, for their future projects, for their current projects. So governments, Islamic governments and Islamic corporations are able to raise funds for their working capital or projects, financing for infrastructure and development projects under Sharia compliant, instead of debentures or loans with high interest rates. Debentures are bonds which provide high interest rates. The funds collected also serves the purpose of liquidity management for financial institutions. Most of the financial institutions issue funds or collect funds for the purpose of liquidity management, and you better know about the liquidity management. Liquidity management means they manage their cashes. Liquidity management means management of cash which is used for the daily basis operations. And individuals, this is related to the financial institutions, but individuals undertake Sharia compliant business because it complies with their internal monetary and regulatory policies. They have options whereby for during excess liquidity they may purchase sukuk. If they want to have excess cash in their hands in the financial institutions, so they purchase sukuk, and then they are short of liquidity and need immediate funds, they may sell their sukuk into the secondary market. If financial institutions have excess of liquidity, at that time they purchase sukuks. If they have need of funds, if they have short of funds, then at that time they issue sukuk in the secondary market. Both Islamic and conventional investors are comfortable with sukuk due to their innovative structure, competitive return and tradability. They are tradable, they have a competitive return, they have competitive cash flows, also they have innovative structure. Why sukuks are issued? With the proceed of this topic, the sukuk market is not restricted to Islamic banks and countries. It means that not only Islamic banks issue sukuks and not only Islamic countries issue sukuk. Sukuks are issued by conventional banks as well as by conventional countries, non-Islamic countries. Leading international banks are also tapping into the sukuk market, including HSBC, Citigroup companies, UBS companies, Goldman Sachs, and BNP Paribas in order to meet the requirements of investors. So all these organizations, all these financial institutions such as HSBC, Citigroup, UBS, Goldman Sachs, the BNP Paribas, these are all conventional institutions. They are all conventional financial institutions. So they also use the sukuk for the purpose of raising funds or for the purpose of getting profit. So sukuk investment involve the funding of underlying tangible assets. They are based on, if you remember, in the last lecture, in the derivatives lecture, in the 9th lecture, we studied that derivatives are the assets which are values are derived from the underlying assets. So sukuks are also the part of derivatives. They are same like the derivatives. The value of sukuks are also derived from the underlying assets. It is largely associated with the economic development. They also provide economic development to the country. They also provide real estate sukuks and infrastructure related assets, which are long-term projects. These are all long-term projects. If any country want to develop their economic, so it's a long-term project, so they issue sukuks. If any organization want to make investment in the real estate, so this is also a long-term project, so they also issue sukuks. Long-term investment through sukuk is preferred by institutional investors. It means that when long-term investment is the sukuk is provided, sukuk is issued for the purpose of long-term investment, so it is referred that they are purchased or sold by the financial institutions. They are not for the individuals due to its stable return. Positive effects for growth and back because it promotes financial market stability. So these were the reasons for issuing of sukuks. They facilitate development of the local, regional and global sukuk market and to tap into a wider investor base. So they also provide facilities to development of local and regional and international markets. Simply, the issuing of sukuks also have a participation, also have contribution in the development of local, in the development of regional and the development of international markets. Sukuk are a means for the equitable distribution of wealth. On the basis of Sharia compliance, sukuks are the assets or the means by which the distribution of wealth is equally distributed the wealth, as it allows all investors to share returns from the true profit generated from the assets. Many governments around the world are passing legislations means laws to facilitate sukuk issuance, leveling the playing field with conventional bonds. So as the conventional bonds are based on the laws and legislations, so many governments also providing, also issuing, also making the legislations, laws related to the sukuk issuances. Now we will compare sukuks and bonds. Sukuk versus bonds. What are the differences in the sukuk and the bonds? If we look to the definition of sukuk and bond, sukuks are financial certificates representing beneficial ownership. Beneficial ownership means ownership is benefited when you are owner of the sukuk, so you will be benefited with the cash flows. It's related to the real assets. It gives investor proportional beneficial ownership in the assets on which the sukuk are based. But in the case of bonds, bonds are proof of death and not a share of ownership. Before we discuss this, I explained it that sukuks are the ownerships, but bonds are not ownerships, they are only death instruments. It is a death obligation from the issuer to the bondholder. On the base of underlying assets, sukuks or the assets on which sukuks are based must be tangible and in compliance with the Sharia and Islamic principle. It means that underlying assets must be available on the time the sukuk is purchased or issued. The underlying asset will have certain prices on the time of issuing of sukuks, and underlying must be available on hand at that time, and the price is predetermined on that time. But on the case of bonds, they are issued to finance almost any purpose that complies with local regulatory legislations. In the case of sukuk, on the base of issuer representation, in sukuk the issuer is not a borrower. When any organization, any financial institution issues sukuks, so it means that they are not borrowers. They are only issuers of the ownership to the investors, but can either be a buyer in a sale contract, a lessee in a lease contract, a partner in a partnership contract. They are examples. But in the case of bonds, issuer representation means that bonds are debt instruments whereby issuers are borrowers from the investors or bondholders. If we look to the issue price, the face value of sukuk is based on the market value of the underlying assets. Before we talked about it, underlying assets must be available, must be predetermined priced. So the price of sukuk, in the case of sukuk, the face value of the sukuk certificate must be derived from the underlying asset. In the case of bonds, the face value of bond is based on the issuer credit worthiness or including its rating. So if the organization is credit worthy, so their bonds are high price, their face value is high. If the rating of the organization is low, the credit worthiness of the organization is low, then in the case of bond, the face value of the bond is less, lower price. If we look the sukuk on the base of returns sharing, so returns are termed as dividends and will depend on the underlying Sharia contracts used. Sukuk holders receive a share of profit from the underlying asset and accept a share of any loss incurred. The amount of profit cannot be associated, it could be fixed or vary as it is based on the sharing of profit and loss. But in the case of bonds, returns are termed as coupon, mean interest rate. Bondholder return can be ascertained and they receive regularly scheduled. For example, and often fixed rate. It is a coupon rate. It's a interest rate. Interest payments for the life of the bond regardless of issuer's loss or gain. So if we look to the capital guarantee, the capital is not guaranteed for the sukuk, but on the base of bonds, the capital is guaranteed for the case of bonds. So this was the difference between the sukuk and bonds. Now, Murabba sukuk. Murabba sukuk includes some steps which are given following. Murabba, issuer of the Murabba sukuk or SPV issue sukuk to raise funds from their investors. It means that if you look about this SPV means special purpose vehicles. Special purpose vehicles, and special purpose vehicles most of the times, sometimes the special purpose vehicles are also called special purpose entities. Their special purpose vehicles are legal entities which involve in the short-term businesses, in a special businesses and special transactions. So issuer or SPV, special purpose vehicle, issues sukuk to raise funds. So for the purpose of the all bonds and sukuks is to raise funds from the investors. So investor make payments to SPV to purchase sukuk certificates. So SPV works as agent between the investor and between the Murabba sukuk issuer. SPV, special purpose vehicles or special purpose entities, are agents between the investors and between the institutions who issue the Murabba sukuk. So first the Murabba sukuks are purchased by the SPVs, then SPVs sell these sukuks to the final investors. Second step in the Murabba sukuk is sukuk certificates are issued to the investors. Before I told you, SPVs are the agents. SPV directly or via the company as an agent purchases the assets from the supplier. So they purchase the sukuks, Murabba sukuks from the suppliers, from the issuers, and then they provide to the final investors. Issuer tax, then SPV sells the assets to the issuer at a cost plus profit margin. Mean it's face value plus profit margin, and profit margin is their commission. Price based on Murabba's concept, and this price which is called cost plus. So cost is the price, and this price is on the based of Murabba concept. So issuer takes the delivery of assets from the supplier. Issuer makes periodic payments against the markup price to the SPV, and SPV in turn distributes the payments for principal to investors. So markup price or markup are the cash flow or the dividend or the return is provided first to the SPV from the issuer. Then SPV distribute this profit, distribute this markup to the investors or to the individual investors or to the final users. Next, by Bedman Ajal Skooks, BBA Skooks. By Bedman Ajal. If you remember, recall from the previous lectures, we studied the by Bedman Ajal, BBA. Means deferred payment sales. BBA means deferred payment sales, referred to the sale of goods on a deferred payment, which includes a profit margin agreed to by both parties. BBA means a deferred payment sale. Technically, this financing facility is based on the activity of buying and selling. So there are also sukuk related to the BBA. BBA sukuks are also available in the Islamic capital market. This kind of sukuk based on the by Bedman Ajal BBA is a contract on sale of an assets to the investor. So this is also a contract of sale of an asset to the investor with a promise by the issuer to buy the asset back in the future. So when this asset is matures, the time is finished, on that time the asset is back purchased by the issuer at a predetermined price, which includes a margin of profit as well. So the profit margin of profit is also included in the BBA sukuk. The difference between the two is that in BBA, disclosure of the cost price is not a condition, and BBA is practiced for a long-term financing. BBA is used for the long-term financing, for the raising funds for the long-term projects. The BBA sukuk structure is similar to the Murabba sukuk structure. So they are same to same. BBA sukuk and Murabba sukuks are same to same. Next, istisna sukuk. Again recall from the istisna contract. If you remember, recall from the previous lecture, we explained the istisna. Istisna is the investment Istisna is in Islamic finance is a contract to manufacture goods, assemble or process them, or build a house or other structure according to the exact specifications in a fixed timeline. So there is istisna. So istisna sukuks are also available in the Islamic the capital market. Most of the organizations also issue the istisna sukuk. How this offers istisna sukuk? Again, there are some steps involved in the issuing of istisna sukuks. The first step in the istisna sukuk is issuer or SPV issue sukuk to raise funds for investors. Same to same. Investors make payment to SPV to purchase sukuk istisna certificate. Sukuk certificates are issued to the investors upon receiving the funds. When they receive the fund, then they will issue to the investors the istisna sukuk. Second step in the istisna sukuk issuing uses the sukuk proceeds to pay the contractor under the istisna's contract to build and deliver the assets. Either they build, either they deliver the assets, but they are based on the proceed of the payment on the contractor under the istisna contract. In the step 3, title to asset is transferred to the SPV first. First, the title of the ownership of the assets is transferred to the SPV to the special purpose vehicles. Then special purpose vehicle sells the assets to the end buyer, and the title to asset is transferred to the end buyer or to the individual investor. In step 5, the end buyer makes periodic payments to the SPV. End buyer makes periodic payment to the SPV, and SPV return distribute the payment to the investors. So upon completion, the asset is delivered to the end buyer. When all the cash flows is completed, our cash flows are finished, at the time finishing of the cash flows, at that time the asset is delivered to the end buyer. Next, salam sukuk. Again, the salam is also studied in the previous lectures, also explained in the previous lectures. Salam is a sales whereby the seller undertakes to apply some specific goods to the buyer at a future date in exchange of an advance price fully paid at spot. It's the same like forward or future contract. Salam is same like forward in future contract. More recently, we studied the salam contract in the derivatives market. We said that if the derivatives are on the base of salam contract, so they will be permissible to the Islamic investors to invest in that derivatives. Again, the issuing of salam sukuk includes some steps. On the first step, special purpose vehicle sends an undertaking with an obligator to source both commodities and buyers. For the purpose of sourcing the commodities and buyers, they sends an undertaking with the obligator. The obligator contract to buy on behalf of the end sukuk holder the commodity, and then it's to sell it for the profit of sukuk holder. In step 2, the salam certificates are issued to investors, and special purpose vehicles receive funds from the sukuk proceeds. When they proceed the sukuks, they get or they receive some funds from the sukuk proceedings. In step 3, salam proceeds are based onto the obligator who sells the commodity on forward basis. Before I told you, it is same like the future and forward contract. In step 4, the obligator delivers the commodity to special purpose vehicles based on the agreed specifications. In step 5, obligator on behalf of sukuk holder sells the commodities for a profit. On the last step, sukuk holders receive the commodity sale proceeds or the sale price of the sale salam goods sold through a parallel salam contract. Next, ijara sukuk or lease sukuk. Ijara sukuks are issued on the sales and lease back arrangements. They are based on the lease. It is called ijara in Arabic. It's ijara of real estate and have been a popular structure and is internationally accepted. Real estate or property, the ijara is very famous on the base of real estate or on the base of property. And this is accepted internationally. all international investors, all international financial institutions and firms and organizations accepted it that ijara is based on the real estate or based on the property. The sukuk holder of the ijara get the right to own the unit of real estate. They have right to ownership of the real estate, receive the rent and dispose of their sukuk. So they also receive the rent from their real estates, from their properties, and in a manner that does not affect the rights of the lessee. The base of they use in the way where the owner of or the lessee or the person who leases the property or leases the real estate, they will not affect the right of that person. As it is easily tradable in the secondary market, they are very easily tradable. These kinds of sukuks, ijara sukuks, are very easily delivered, very easily traded in the secondary market. Ijara sukuks are certificates of equal value. They have equal value, evidencing the certificate holders' undivided ownership of the leased assets. It means that they have equal value. The lessee and the lessor both have equal value in the case of lease. And it represents title deeds of equal shares in a leasing projects. Before I told you, the lessee and lessor both have equal shares in the leasing project. Usually equipment or real estate and entitles the holders the right to own shares, receive internal fees and dispose of their sukuk in a manner that does not affect the right of the lessee. Sukuk holders bear all the cost of maintenance of and damages to the assets. Next, Mudarba sukuk. Mudarba sukuk, we also studied mudarba. It's a kind of business where mudarib uses capital and the another person, the agent, manages the business. So one person issue capital, the other person uses or manages this capital, and both are the shareholders of the organization or of the business. So there are some sukuks relating to this kind of businesses. The investors subscribe to the certificates issued by a mudarib and share the profit and bear the losses. Both of them get profits, equal profits, and both of them bear equal losses arising from the mudarba operations. The return to the holder are dependent on the revenue by the underlying investment. So their return is dependent on the underlying investment. So their return is based on the business which they have started. Sukuk holders of this kind of mudarba sukuk considered to be owner of common shares. They are same like the common shares or common stock shares in the mudarba capital, and all benefits and returns are related to the investor's percentage of ownership in the capital. The issuer of these certificates is the mudarib. The person who issued these kinds of certificates, these kinds of sukuks, the issuer is called mudarib. The subscriber are the capital providers. Subscriber mean purchaser of these kinds of sukuks, these kinds of certificates are the providers, capital providers, and the realized funds are the mudariba capital. The funds which are received by the mudarib are named as funds mudarba capital. A mudarba sukuk gives its owners the right to receive his capital at the time the sukuks are surrendered, and an annual proportion of the realized profit is agreed. Upon the expiry of the specified period of the subscription, the sukuk holder are given the right to transfer the ownership by sale or trade in the securities market at their discretion. So they can easily trade these kind of sukuks, these kind of certificates in the secondary market when they need to have cash and they want to sell their mudarba sukuks. Next and last is the musharka sukuk. Again, recall from the previous lectures, musharka is also discussed. It's a type of business where there are equal partners and these partners get profit, proportionate profit on the base of their capital provided. As their capital provide, so they get the profit on the base of or on the proportionate of their capital. So there are also exist some musharaka certificates which are called musharaka sukuk. Musharaka sukuks are participatory types of investment. Participatory types of investment means that all the partners participate in the running of businesses that are based on the profit sharing terms. This kind of business is called profit and loss sharing business, and funds are mobilized for establishing new large scale projects. When these types of organizations want to establish a new project, a large scale project, so they will issue the musharaka sukuks, or they want to develop existing ones, expand their existing business, so again they issue musharaka sukuk, or financing business activities on the basis of equity partnership. The certificate holder become the owner of the project. Any person who purchase musharaka sukuk, he become the owner of that business or owner of that project. It represents the ownership of the project or the asset of the activity as per their respective shares in the musharaka venture, for example profit and loss sharing business venture. So musharaka is also, it is called the profit and loss sharing venture or profit and loss sharing business. All providers of capital are entitled to participate in management. All the partners, all the capital providers are supposed to participate in the management decisions of the organization, management decision of the project, or management decisions of the business or venture. But it is not necessarily required to do so. Not required. Most of the partners only provide capital and they do not participate in the management decisions. Normally, the issuer is appointed as the musharaka partner's agent in managing the business. Normally, issuer of the capital is appointed as the musharaka partner who will be agent for the other partners for the management of the business. The profit is distributed among partners in pre-agreed ratio. Profit is distributed to all of the partners on the basis of pre-agreed ratio, while the loss is borne by every partner strictly in proportion to respective capital contribution. So the profit is distributed on the base of agreed ratio and the loss is distributed to the partners on the base of their capital providing. Musharaka sukuk is traded as negotiable instrument. It's a negotiable instrument and can be bought and sold in the secondary market easily. The last topic of today's lecture is hybrid sukuk. Hybrid, from the name it denotes that there are different sukuks in one platform. It is a type of sukuk structure in which underlying pool of assets consists of two or more Islamic financing contracts. For example, the funds may be mobilized based on istisna contract, based on ijara contract, and based on mudarba contract may be possible. So these three types of sukuks are provided for the purpose of mobilizing capital, mobilizing or getting or receiving the capital, all at the same time and within the same structure. The hybrid structure enhances mobilization of funds. It allows the use of Sharia compatible financing contract for the financing means. For example, if we look to the conventional organizations, at the same time conventional organizations issue bonds, issue preferred stock, issue common stocks. So these are all hybrid form of bonds. So same like the conventional hybrid bonds, so they also issue hybrid sukuk, which includes a pool of assets such as istisna contract, such as ijara contract, such as salam contract, may be possible, this mudarba contract, musharaka contract, all of these. Two or more than two. It also bears resemblance to a conventional securitization structure, as conventional organizations securitize their structure, securitize their bonds, or securitize their assets or securities. So it's same like it also bears the resemblance of the securitizations of the hybrid sukuks. Since debt receivables can be sold to the special purpose vehicles over which the special purpose entity issue bonds. First of all, they issue they they issue debts to the special purpose vehicles, then special purpose vehicles issue bonds in the secondary market. In a hybrid sukuk structure, the originator transfer tangible assets. The person who originates, who issue the hybrid sukuks, transfer tangible assets which are the underlying of different contracts to the special purpose vehicles. Again, special purpose vehicles or SPVs become the agents between the issuer, between the provider, between the issuer, between the provider, and between the investor. In turn, the SPV issues sukuk to investors who become the sukuk holder and receive sukuk proceeds from them. So this was your today's lecture regarding the sukuks. So I hope you got plenty of knowledge regarding sukuks, that what are the sukuks. So they are same like the bonds. And for now, have a good time, have a nice time. Thank you so much. Thank you very much.